Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Hey everyone, and welcome back for another deep dive. Today, we're going exploring, and we're going to need our headlamps for this one.
Oh, sounds exciting. What kind of terrain are we talking about today?
Well, we're heading into the lower middle market, specifically those tempting business deals in the $250 million range. Lots of potential, but yeah, some hidden dangers lurking around too.
Ah, yes, the LMM. I see where we're going with this. Always a fascinating area. High stakes, big rewards, but definitely some unique risks to watch out for.
Exactly. And to guide us through this, we've got a fantastic report from the CFA Institute all about due diligence and, something called agency risk, which we'll get into in a minute.
Great resource. Always appreciate their insights. So are we diving right into that agency risk, or do you want to set the stage a bit first?
Let's do a little scene setting first. I mean, why is due diligence so much more critical in the LMM than with those big-time corporate mergers and acquisitions?
Great question. Think about it this way. You've got these companies, maybe built from the ground up by, say, a brilliant engineer. They're experts in their field, right?
Right.
But they might not have gone through that whole, M&A boot camp that you'd see in larger companies. They're kind of thrown into this complex sale process. So due diligence becomes even more crucial because you're dealing with, often less structured businesses.
Okay, I see where you're going with this. So management quality might be inconsistent, structures might be a bit shaky, and they might not have those battle-tested procedures in place, right?
Sure, precisely. And that's where agency risk comes into play.
Okay, let's unpack that a little. What exactly do we mean when we say agency risk in the context of LMM deals?
Well, imagine you're a buyer excited about a potential deal. You're working with someone, an agent, who represents the seller, right? But their interests, they might not always line up perfectly with what's best for the seller. That misalignment, that's the agency risk in a nutshell. And it's amplified in the LMM because, we often see less sophisticated intermediaries, maybe business brokers who haven't really, mastered the art of M&A.
Okay, that makes sense. So you're saying that in the LMM, you've got these intermediaries who might not have the experience or the expertise to truly protect the seller's best interests.
Exactly. And this report actually breaks down that agency risk into three, let's call them danger zones.
Oh, danger zones. I'm intrigued. Tell me more.
They call them anchoring, bad advice, and wait for it, the telephone game. Each one presents its own unique challenges for both the seller and the buyer, actually.
Okay, this is getting good. Let's start with anchoring. What's that all about?
All right, imagine this. You've got a business broker. Maybe they've done a few deals. Some maybe haven't even closed, And they're advising the seller saying, hey, these are the market terms. This is what you should expect. But they're using irrelevant data or outdated information. They're anchoring the seller to these unrealistic expectations.
Oh, I see. So it's like using last year's weather report to pack for a trip to the Bahamas.
Yeah.
You might end up very unprepared.
Exactly. The report actually mentions a case where a broker was using a specific interest rate from a deal that never even went through.
Wow. That's like using a broken compass to navigate. You're bound to get lost.
Right.
So how does this anchoring, how does it play out on a real deal? What's the impact?
Well, let's say you're negotiating the sale price, right?
Right.
The seller, influenced by that, that unrealistic anchor from the broker, they might think their company is worth way more than it actually is in the market. Then a buyer comes in, makes a fair offer based on real data, and suddenly it's perceived as a low ball offer.
Ah, I see. So it sets up this this adversarial dynamic right from the start. Trust breaks down, negotiations stall, everybody's frustrated.
Exactly. And it's not just price, it could be anything. Payment structure, earnouts, you name it. If that anchors off, the whole process gets thrown off balance.
Okay, anchoring sounds like a real recipe for disaster.
Yeah.
So what about this bad advice category? Are we talking about brokers intentionally misleading sellers?
Not always. It's often more about what's missing, what's not being said, like missing a crucial detail in a contract that, a lawyer would have caught. For instance, imagine a seller agreeing to a long-term non-compete clause without fully grasping what that means for their future.
Ooh, yeah, that could be a big problem down the road.
Right. A seasoned M&A advisor would have, flagged that, explained the implications, and made sure those terms are actually reasonable for the seller.
So it's not necessarily malice, but more like a lack of expertise leading to, well, some potentially harmful consequences.
Exactly. And those consequences can be just as damaging, eroding trust, making the whole process way more complicated than it needs to be. The report actually found that in deals with inexperienced intermediaries, almost 40% of sellers felt they hadn't gotten adequate advice on some pretty crucial terms. That's a lot.
Yeah, that's a really sobering statistic. It really highlights why having the right people on your side is so important. Okay, so we've got anchoring, we've got bad advice, and then, of course, we have this ominous-sounding telephone game. Telephone game. Okay, gotta love that. Always a recipe for some confusion. So paint us a picture. What does that look like in the world of LMM deals?
Well, picture a buyer and a seller, right? They're trying to work out the nitty-gritty of a deal, but instead of talking directly to each other, everything's going through the broker. Every question, every offer, every counteroffer. It's like, that classic game we all played as kids. Things get distorted, details get dropped, and suddenly you have a whole bunch of misunderstandings.
Oh, yeah, that can spiral out of control pretty fast, especially when you're dealing with complex stuff like, legal terms and financial structures.
Absolutely. And the report, it really emphasizes this point. They found that deals where that broker was controlling all the communication, they were way more likely to have delays, disputes, sometimes even complete failures.
Oof, that's not good.
Yeah.
So over 60% of buyers said they were frustrated by that lack of, direct access to the seller.
Yeah, it's a common pain point. Okay, so we've talked about the risks, the potential pitfalls, but let's shift gears a bit. For our listeners out there who are now thinking, okay, maybe I should just avoid LMM deals altogether, what can they do? What are some practical steps to actually mitigate this agency risk?
Yeah, give us the antidote to this agency risk poison.
Right. Well, good news is this report offers some really solid advice, and I can, throw in some of my own experience from the trenches too.
Perfect. Always love those real-world insights.
Okay, so first, let's tackle that anchoring issue. Don't be afraid to have that, that sometimes awkward conversation with the broker about it.
So being upfront right from the start.
Yeah. Sit down, explain how using, irrelevant data or outdated numbers can actually harm the deal. Emphasize that everyone benefits from, working with realistic market data. The report actually had this example where this approach worked wonders.
Oh, really?
Yeah, the broker was totally open to the feedback. They adjusted their approach and the deal, it closed smoothly. So it can definitely work.
Okay, so open communication, a little education can go a long way. What about that bad advice problem? How do we protect ourselves and the seller from those hidden dangers?
This one's a bit trickier because, as we said, it's often unintentional, right? The broker might genuinely not have the know-how to spot those issues or give really solid advice on the specifics of the deal.
Right. Yeah.
That's why I always tell sellers, get professional advice early on. Bring in lawyers, financial advisors who specialize in M&A.
Makes sense. Get those experts in your corner.
Exactly. They can, look at the deal structure, see if there are any red flags, and make sure the seller's interests are really protected.
It's like having a guide in a jungle. They know the terrain, can spot the dangerous stuff.
Exactly. And it's not just about protecting the seller either. For the buyer, encouraging the seller to get that advice, it can actually make the whole process smoother.
How so?
Well, a seller who's well-advised, they're more likely to, make informed decisions, which leads to, less conflict during the negotiation.
Oh, so it's a win-win. Fair deal, fewer headaches, less time wasted.
Exactly. Okay, now let's talk about that telephone game. We've said direct communication is key, but how do we actually make that happen? I mean, in real life.
Yeah, because I can imagine some brokers might be a bit hesitant to, step aside and let the buyer and seller chat directly.
Oh, absolutely. Some might see it as, losing control or something. That's where being assertive and setting those clear expectations up front, That's really important. Right at the beginning, when you're engaging the broker, let them know that you value open communication and expect to be able to talk to the seller directly at certain points in the process.
So kind of laying down the ground rules saying, hey, this is how we operate.
Exactly. You might get some pushback, but most brokers, if they're really looking out for the seller, they'll understand and respect that. Now, I get it. Direct access isn't always possible. Some sellers might be, super busy or just prefer to, let the broker handle the communication.
Yeah. Okay. So what do we do then? How do we minimize that risk of, things getting lost in translation?
That's where documentation and confirming everything, that becomes super important. Every time you negotiate something, put it in writing and, send a copy to the seller. Then follow up directly with the seller just to make sure they understand and agree.
So create that paper trail, make sure everyone's on the same page, literally.
Exactly. It might seem like extra work, but honestly, it's better to be, extra cautious in LMM deals. It can save you a lot of trouble down the road.
Okay, I'm definitely taking notes here. We've covered a lot. We've explored the nuances of agency risk. We've talked about strategies to mitigate it. Before we wrap up this section, I want to give our listeners a moment to, process all this great information.
Take a breath. Yeah.
Exactly. If you had to distill it down to one piece of advice, based on everything we've discussed, what would it be?
It's a good one. I'd say more than anything, don't be afraid to ask questions. Challenge assumptions. Push for clarity. The LMM, it's full of amazing opportunities, but things can go wrong really fast if you're not careful. Be proactive, be informed, and most importantly, be your own advocate.
Great advice. Knowledge is power, especially in the sometimes murky waters of the LMM. Okay, we've dug deep, unearthed some real gems of wisdom today about agency risk. Welcome back, everyone, for the final stretch of our deep dive into agency risk in the lower middle market. I feel like we've really, explored some of those hidden corners of this market.
Yeah, it's been quite a journey, but, a rewarding one for sure. We've learned a lot.
Definitely. So let's equip our listeners with some tools they can actually use. What are like 3 key takeaways they should remember as they're, navigating these waters?
All right, 3 key takeaways. First one, awareness. Just understanding that this agency risk, it's a real thing in the LMM, recognizing how it can impact those deals, that's huge.
Like they say, knowledge is power.
Absolutely.
Okay.
Number 2, communication. Don't underestimate being able to talk directly to that principal seller whenever possible. You cut down on those misinterpretations, makes for a smoother negotiation.
Right. Building relationships, getting rid of all that noise and confusion.
Exactly. And finally, the third one, call in the experts. Getting those legal and financial advisors involved early can make a world of difference.
Yeah, they can help you spot those potential pitfalls, make sure you're protected, guide you toward a successful outcome. It's like having a map and compass when you're in uncharted territory.
Love that analogy.
Okay, so we've armed our listeners with knowledge, with strategies. Now, I want to leave them with a question, something to really ponder as they're, venturing into the LMM. Knowing what we know now about these risks, how can you as an investor, as an advisor, use this information not just to protect yourself, but to ensure those deals are fair for everyone involved?
That's a great question. Really gets to the heart of it. It's a challenge, no doubt, but, I think it's one we can all, rise to meet. It's about taking this knowledge and using it not just for our own gain, but to create a more ethical, more transparent market, one where, both sides can actually benefit.
So it's like, creating this ripple effect. By being informed, being proactive, we can contribute to a more responsible way of doing business.
Exactly. It's about, holding ourselves and everyone else to a higher standard. In the end, that benefits everyone involved.
Well said. That brings our deep dive into agency risk in the lower middle market to a close. I hope you all found it insightful and, more importantly, empowering.
It's been a pleasure.
And for our listeners, don't forget to check out the show notes for links to that report we talked about, plus some additional resources that can help you navigate the LMM. Until next time, keep exploring, keep learning, and keep diving deep.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.